So welcome to the Digital Economist from the World Economic Forum here in Davos, Switzerland. We are holding our inaugural roundtable and very excited to have a huge turnover and a highly curated roundtable. Digital Economist is an impact platform focused on thought leadership and bringing investable opportunities in alignment with the Sustainable Development Goals to the fore. So we're very excited to welcome folks on January 23rd this evening, and looking forward to great partnership and a lot of value we create for the community along the way. So welcome.
But welcome, to our weekly speaker series. We are so excited to have you.
Thank you so much, Navroop. It's great to see all the success that you've had over the years as well, and our space has just evolved and grown and matured so much in just a short amount of time. So maybe just to give a little bit of kind of like background and perspective. So as you mentioned, I'm the founder and president of the Chamber of Digital Commerce. We'll be turning 7 years old this summer. So it's been quite a wild ride, but we've been kind of early adopters and early participants in the digital asset and blockchain technology ecosystem. But the Chamber's mission is to promote the acceptance and use of digital assets and blockchain-based technologies. So we're exclusively focused on the blockchain ecosystem, and we work with policymakers on all of the regulatory issues involving this exciting new asset class and emerging technology. And we also work with businesses. So we're here to support businesses that are investing in and innovating with blockchain technology. And we're also here to educate. So we spend a lot of time speaking to different audiences in the business and the policy community to help them understand the critical importance that this technology is going to play in the global economy for many generations to come.
Thank you. Thank you for the precursor. I definitely want to talk more in detail about, of course, digital assets, the opportunity there, the crypto bull run we are in the middle of right now. But before we kind of go into it, Perianne, I'd love to learn a little bit more, because we talked a little bit about it, about your personal journey and what inspired you. Tell us where you're from. Tell us what inspired you to start this organization, and really what purpose drives this, and the mission of the organization.
Yeah, so maybe I'll just start at the very beginning of just my own personal journey of how I got into cryptocurrencies. So I'm from Florida. I grew up in a very, humble beginnings in Central Florida. And I was studying economics at the University of Florida during the financial crisis of 2008. And the financial crisis really was a housing crisis, and the housing crisis was pretty much the state of Florida. So there wasn't anybody that I did not know from my family and my community that wasn't impacted by what was happening in that financial and economic, that's historic economic collapse. Wow. I knew many people who lost their homes, not because they did anything wrong, but their houses went underwater. They could no longer afford them. Lots of people were losing their jobs. Lots of families who put all their savings in the stock market and lost life savings through the stock market, volatility of that time. And just as someone who was studying economics, I felt like I really wanted to understand what was happening around me and just my community. And there was a couple classmates of mine where we were all getting very frustrated because our textbooks and our professors could not explain what was happening in real time. And really the only person that made any sense was this medical doctor who was running for president, Dr. Ron Paul, who was able to actually explain some of the things that were going on in the economy. And that led to my own personal study of what is money and how does monetary policy actually work, and what was happening between Washington and Wall Street, and how is it that the government has racked up so much debt on behalf of the citizens and the taxpayers, and why are we bailing out certain companies and not the people? And ultimately that led me to just feel very convicted and just understanding that there were fundamental flaws in our financial and our monetary system. There were things that I was not proud of as an American, seeing where we were, like the state of our economy as a nation. And I just, at a young age in college, I decided to dedicate my career to working in economic policy and fighting for something better. And that led me to the White House. So I interned in the White House and the National Economic Council my senior year of college. And then after that, after I graduated, I moved to DC and lived in DC ever since, working in public policy. And during that time, I learned about cryptocurrency. And when I was first introduced to this concept of Bitcoin, a currency that was not owned or operated or controlled by a government or a corporation or a group of people, just that idea was very, very interesting to me as someone working in economic policy. And I just started to study Bitcoin on my own for a long time. And a lot of those things that I was fighting for, more transparency in the financial system, sound money, a more efficient and safe process to move money globally. At some point, a light bulb just went off of all these things that I wanted to see from a policy perspective really could be effectuated through the adoption of blockchain technology. So I later started the Chamber of Digital Commerce, and I kind of pivoted my focus from working in government to supporting this industry. And I feel very strongly that blockchain technology is an answer to a lot of those fundamental issues that are in our global financial and monetary system. And I feel very convicted that this technology is going to play a huge role in what the future of money and how the financial system works.
Thank you, Perianne. That's so interesting. And I think there's so many things you've touched upon here that we can sort of go into, but I think what stands out for me here, just as you were talking, was I think the response to a broken economic and financial system, which is kind of like the all-encompassing truth, perhaps, that we sort of live in. I remember when I think the financial crisis happened, I think my father and my uncles had some money in the public markets. And I remember my uncle yelled my father's name, yelled in a way to call him. We do a lot of that in India, 2007, 2008. And he said, everything's gone, just the investment in the public markets, because not only the US, but all the other markets around the world also tumbled with that. And it's not it's not just another crisis, right? It had real consequences. And sort of, I remember giving talks. I believe I was in high school at the time, so just 2-3 years behind you there, Perianne. And soon after in college, sure enough, I majored in economics, and I was giving talks on this, and we were doing debates and discussions and sort of talking about the housing crisis in the U.S. And so all of this to say, I kind of really relate with that. But I think I had that perspective, which was sort of non-American, which was outside of the US. So it's not just, I guess, communities who are living inside, but also, of course, everything that happened as a consequence of that to rest of the economies in the world. And of course, I remember at the time, they were saying that the less globalized you are, the better off you are in a crisis, because the less interdependent you are with the U.S. economy, or, for that matter, any major economy that's going through a crisis situation. And so, it sounds like, Perianne, we're talking about this in a very kind of a timely and interesting, or I should say interestingly timed conversation, between the two crises, starting from a crisis to holding the flag in the current crisis, of course, the recession triggered by the pandemic, and of course the other social and environmental issues that are going hand in hand. We've been calling it a quadruple crisis: the climate, the social, the economic, and the political. So, coming back to your journey, so you started the Chamber of Digital Commerce. Talk to us a little bit about the early days. So what year was this in? And I have a story there too, with like how I stumbled upon blockchain that I'm so excited to share with everyone, because we've been talking about all kind of things here, but we haven't had the chance to talk like in depth about blockchain on our speaker series so far. So, but over to you. Tell us about the early days of the chamber and what sort of triggered or inspired the move to start an organization like this.
Yeah, so I was very excited about the potential of Bitcoin in really early days, and felt like there was a lot of merit to this technology, and it really deserved the opportunity to grow and flourish. And it very much started as an experiment, but one very worthwhile to protect and kind of see where it would go. And there were a number of things in the early days of Bitcoin that really harmed its reputation. So 2013 was a impactful year for Bitcoin. There were a couple things that happened. In 2013 was the year Cyprus was going through its bailout with the EU. This ended up turning into an international conversation, but there was talks of Cyprus leaving the EU, and the people in Cyprus were facing a lot of economic uncertainty at that time. And in that moment, the people of Cyprus started buying Bitcoin as just a place to put their money when, in a moment in time where they didn't know what was going to happen. And that was the first time that Bitcoin was part of an international conversation, that it made international headlines throughout the news. And that's, 2013, the price of Bitcoin started around $70 and it went up to $1,300 during that Cyprus piece. And to me, that was just an exciting moment, because it showed that this idea of an alternative store of value, or an alternative asset, or an alternative currency, that maybe Bitcoin could have some actual value for one of those use cases. And that was the first time that we had really seen that start to happen. Well, then some not so great things happened. There were a couple very large scandals. One of them was Silk Road, which was this massive dark web platform where millions, if not billions of dollars of people buying illegal drugs on Silk Road. And of course, the US government was able to go after Ross Ulbright, who's still in jail today, and take the site down. But that was just a huge international scandal as well. And it led many people just to think that this whole Bitcoin thing was just the currency of choice for drug dealers, and it had no real use in actual commerce. It was just used to facilitate illicit activity. And we still face that narrative today. And of course, that's not true. And then the other was the Mt. Gox collapse. So there was an exchange in Japan. At the time, 70% of Bitcoin transactions were going through the Mt. Gox exchange. And that exchange failed, and hundreds of millions of dollars of consumer funds were missing or lost. And that was also just a huge black eye, and led to lots of regulatory scrutiny and oversight over Bitcoin. And as somebody who had actually spent a number of years looking at Bitcoin and studying it and talking to the people building on it, what I was reading in the media about this just being the money for drug dealers, or Bitcoin's broken, the exchange collapsed and it's dead, I knew that a lot of that just wasn't true. And when you looked at some of the concerns from public policymakers, they had right to have concerns. So the concerns were valid, but you could tell that they didn't have a great understanding of what actually happened. And I felt, I could see very early that there was a need to have public policy experts and professionals working with regulators, working with members of Congress to help them understand what was happening, to help clear up concerns, to talk through issues that they have, to, again, make sure we're protecting this nascent and very interesting technology, but also ensuring we're protecting consumers and investors in an appropriate way. And that's a very fine and delicate line that regulators deal with every day, is how do we protect the financial system without stifling technology, stifling economic growth, stifling jobs. And I felt that an effort for Bitcoin and for the larger, blockchain technology was desperately going to be needed. So that's when we launched the Chamber of Digital Commerce. And turns out we've been really, really busy ever since. And the past 7 years seem like a total blur, because there has been a big need and there has been an interest from the policy community to understand what this is all about. And over the past 7 years, we've been up against lots of challenges, but we've also been able to educate many, many people to help them understand how important this technology is, to make sure that we get it right and make sure that we are protecting the development and the innovation, because there is lots of potential promise to this technology for the economy and for the financial system.
Right. And I think, to your point about balancing, which is, job of policy, innovation on one hand, encouraging innovation. And of course, the entrepreneurial ecosystem in the US is the biggest draw for labor around the world, talent, capital around the world, with, like you said, the scandals and all the challenges in a new technology is a very challenging task. So fantastic work. 7 years in the game. That's not easy. It can't be a smooth ride. But I've got a couple of questions here. One from Arvinder, who's our entrepreneur in residence at the Digital Economist. And I know super interested from the investment side. He's asking about what held your confidence to the first crash of the Bitcoin bull run market, which I think kind of ties very well into what you just talked about, the ups and downs. But I guess we can also very quickly, Grace, who was also at the Digital Economist. So I encourage everybody from other organizations as well to ask their questions. Our first entrepreneur in training, she's asking about the use case of the application and the potential of the technology to do good is kind of really how I'm reading this question. How can we make cryptocurrency more effective and stable for those who currently live in poverty? And, if you're talking about a constant increase in price, is that inclusive, or is that making the technology more exclusive?
Yeah, so I guess we kind of started the conversation on the supply-demand principles of Bitcoin, and the price of Bitcoin is at all-time highs, and it just keeps hitting all-time highs all year. This year. And, at the time of our conversation, the last time I looked, it was at about $47,000, which is unbelievable, especially considered when I first started looking at this, it was like $10. So we've seen just a huge, huge change and evolution.
I hope you were an investor at the time, Perianne. $10.
Well, yeah, funny. Yeah, as a former government employee, I was not personally wealthy, and so I had a few pennies, I could put together, and those pennies have grown to quarters, but it doesn't look anything like the early VCs that were able to get into this space. So yes. So there's these big demand, these big pressures on price. There's a limited supply. So the more people that buy Bitcoin, the price just goes up, and the price has increased very significantly just in the past couple of weeks. And so a great question from Grace of, as the price goes up, what about people, people talk about financial inclusion, and there's this case for financial inclusion with Bitcoin, and people talk about be your own bank and you have access to financial services that you didn't have before. But if the price is going up, how does that help people who don't, who are at those lower ends of the economy? Well, one of the great things about Bitcoin is it's truly a virtual, a digital currency. So it can be denominated to 8 decimal places, and you don't have to buy a whole Bitcoin. That's one misconception that I think a lot of people have, and a lot of people still have, that you don't have to buy a whole Bitcoin. You can buy just a tiny bit. And one of the things that Bitcoin I think will enable is micropayments, where you can actually send transactions efficiently and affordably at levels we typically would not have been able to send in a digital way. So if you look at the credit card interchange fees, a lot of times if you just think about going to the gas station and you're buying some snacks, usually there's a sign that says you have to spend at least X amount of dollars if you're going to scan a credit card. It's because you have these interchange fees. Well, with Bitcoin, you in blockchain technology, you can send payments more efficiently and more cheaply. And also because you're going through a decentralized platform that's not owned or controlled by an intermediary, you don't have the same constraints if you were going through a centralized system, like through the banking system or using credit cards. So it has the potential to reach those who don't have access to financial services. And still today, over 70% of the world's population does not have access to basic financial services. And in the US alone, the un- and underbanked is at almost 50%. So there's a lot of people who are not being serviced by the traditional financial system. And we really should be spending more time investing in financial technologies like Bitcoin, like blockchain, to see how we can reach those who currently do not have access. And I think there's a very strong case to be made there. So that was question one. And then the second was, what has held my confidence through, from the first crash and price up to today's bull market? Great question as well. So I'm not price motivated when it comes to Bitcoin. I kind of talked about why I've decided to dedicate my time and my career to this space. And mind you, I started a nonprofit. So I've always been very convicted that this technology has the potential to fix some very fundamental flaws in our monetary system. And it's not the price that motivates me to get up every day and continue to build at the chamber. If so, I would not be at a nonprofit. I would probably be at a for-profit company. So there is a lot of volatility in this space. And for investors, you really have to have a very strong stomach to get through the day-to-day volatility. But for me, it's always been about the much bigger picture. How do we address issues in our larger monetary system? And that's what drives me. And it has been very interesting to see the network grow over many years and continue to grow. In fact, Bitcoin has been the best performing asset 9 out of the past 11 years. But there is a lot of volatility, and that's very different if you're looking, if you're an equity investor. So it deserves its own dedicated analysis. You can't compare it to other asset classes. And that's just one feature that is very different than other more traditional things that investors will, have invested in.
And just to follow up question there, Perianne, I think you talked about this a little bit, where on one hand, we're looking at, of course, this as an investment where, we anticipate the price is going to go up, and then the micropayments is a very important and tangible use case. But I think just to kind of play the devil's advocate here a little bit, does that equate or does that equal inclusion? Because the same problem where people who have a ton of cash, like you mentioned, got in early and maybe bought up a whole lot of it, would continue to get rich, but at a much more disproportionate way because of the growth of the asset, which you just quoted, right? The best performing asset in the past 9 years out of 11. So like the quote unquote crypto whales, right? So like, how do we sort of get past that perpetuation of inequality and sort of deploy the tech to actually do good and create more inclusion? Just from that, I feel like there's some real sort of layer two thinking and work that needs to go in. So really curious to hear your insights on that.
Yeah, absolutely. I think a store of value is a very strong use case that has been proven for Bitcoin. And remember, the Treasury defines money as being a unit of account, a store of value, or a medium of exchange. It doesn't have to have all three characteristics. Bitcoin has really emerged as a store of value, like gold. So what does that mean? The St. Louis Fed issued a cryptocurrency report a couple of years ago saying Bitcoin has emerged as its own asset class and can be, will likely be used as a tool for diversification. And then Jerome Powell, the former chairman of the Fed, also testified in Congress when he was asked about Bitcoin in his semi-annual report to Congress, and he compared Bitcoin to digital gold. He said it's being used as diversification. That's a very specific thing that Bitcoin is turning into. This week, we had the announcement from Tesla and Elon Musk that Tesla has put $1.5 billion of their reserves into Bitcoin on their balance sheet. Also, Michael Saylor from MicroStrategies has been very vocal about doing this as well. So Square, MicroStrategies, and Tesla are the first three public companies to put Bitcoin on their balance sheet. And both Michael Saylor and Elon Musk have talked about Bitcoin as a store of value. So if you look at dollars and what's happened to to fiat money, especially in the United States, but really in emerging markets all over the world, we are in what Paul Tudor Jones calls the great monetary inflation. So the war on COVID has really turned into a war on currencies. And inflation or debasement, it's really a hidden tax. So anyone who's holding fiat currencies, there's a price on that. Where Bitcoin works very differently because you can't inflate its supply. And that's one of the reasons why the price is just going up and up and up. So people who have cash reserves, whether it's just people or companies or corporate treasurers, they're facing many questions. And this is something I encourage everybody to think about, is really understanding what is money. It's one of the most powerful things you can think about for yourself, because you need to protect your wealth and make sure you have the resources you need for your family and for the generations that will come after you. How do you store your wealth? Well, traditionally, we've done that with gold. Today, people are turning to Bitcoin. Which I see as a more 21st century kind of version of what gold can did plus more, and that's one of the things that's very powerful about this technology, but also serves an important role when we're in such an unprecedented point of economics, and in dealing with debasement at a level that's never been experienced in the history of the world. And it leaves a lot of people questioning, what do we do? How do we protect our savings? How do we protect what we want to pass on to our family and to our children? And Bitcoin is emerging to be a potential option for that. And that, to me, is a really important resource given all of the uncertainties we are all facing in today's environment.
Right. And I think you brought up some really interesting and key points there. First of all, about money, right? I think there's like these two camps. One is where people really want to believe or think that money intrinsically has value. And then there's like, I guess, the people who actually know. I hate to state it that way, but money is a human invention, right? It is something we all decided is valuable, and hence it has value as with performing all the functions that you listed, right? The traditional definitions I remember in college: money, M1, M2, M3, and of course the 4 key qualities or characteristics anything that is money needs to have. And the fact that, we as a human species decided that this is how we want to contain and measure and hold and transact our value comes as a big shocker. And I think even at a personal level, I guess encouraging everyone to just study some basic economics, kind of knowing the socioeconomic structures you operate in and learning about money just kind of goes a long way. And I think also just kind of, dovetailing into the excitement and then the potential of the new technologies. By the way, somebody just sent me a note yesterday, said there's $1 billion worth of transaction that passed through the Bitcoin ledger yesterday. So I just hope Tesla hasn't checked out, but so that's a little rumor there. But we have an interesting question here from Drew Ferson, and we'll take follow-ups as if we don't have other questions. So I encourage everyone to list out their questions here as well from Grace and Arvinder. But Drew's asking, what is your opinion of the FinCEN's proposed rules on transactions involving cryptocurrency wallets? And since you, Perianne, work so closely with government and in policy, and how is the digital chamber contributing to educating lawmakers on the impact of the proposed rules?
Wow. Well, the FinCEN, the proposed FinCEN rules have been quite the project and contributed to my lack of sleep over the past couple of months. So for those who maybe may not be as familiar with what happened, I'll just kind of explain it from the beginning. So as we had one administration leaving, there were some people who wanted to use the policy process to create a legacy for themselves. In my opinion, not the right way to go about this. They are no longer in office. So there were some regulations, proposed regulations that were published right before the Christmas holiday, the Friday before Christmas. It was over 70 pages of very complex reporting and record keeping requirements that would apply to banks and MSBs, money service businesses. Those are all the trading platforms for digital assets. There's a lot of things to talk about of what was actually in those rules, what's in them. But kind of two things that I'll highlight. One was the process, and two was the actual substance of the rule. On the process, these rules were being rushed through. So they published a 70+ page set of regulations the Friday before Christmas, and then said the industry has 15 days to comment. 30 days is considered a short time frame. 15 over a holiday. And it was really only like a couple of business days because you had multiple federal holidays and weekends, including in that time frame, was, we argued, untenable, irresponsible, but also illegal, and was not done in accordance to the APA. And so this caused great concern, not just because the things in the rules had issues with them, but the process was completely inappropriate. So that led to most of our team at the chamber completely deleting our holiday vacations to hire teams of lawyers to help us ensure that the industry had a voice in a time where our voice was not welcome. And we forced our voice at the table. And what we did is we sent a series of letters to the Department of the Treasury and to FinCEN explaining how this was not appropriate, this was likely illegal, and we are ready to take action, as much as we need to ensure this is done the right way, because we want to make sure this technology has the opportunity to flourish and we protect innovation. And we absolutely agree that we need to protect the financial system from illicit actors. And we are operating with good faith, but the policymakers in this point weren't. They weren't following their own rules. So we also put together a petition, and on Christmas, we had 3 days to get a petition in on Christmas, and we had over 5,000 people across the United States send a petition to the Treasury asking them to extend the comment period because 15 days was not enough time to assess these very complex rules. And the comment period was extended, and which was a huge success in itself, because ultimately what was happening there is the Secretary of the Treasury wanted to leave office with another notch in his belt that he was tough on crypto. And by extending the comment period past the day of the administration leaving, which was January 19th, he could no longer have that legacy solidified. So we were able to put enough pressure on the Treasury Department and then Secretary Mnuchin to let go of that and to work with us to get the rules right. So the comments have been extended to the end of March, and now we are doing a very meaningful assessment of the substance of what's in those rules. And we have the appropriate time to do a much deeper dive beyond what we could possibly figure out in 15 days over the holidays. As we're digging into the substance of the rules, there are lots of things that we have concerns about. The biggest one is what I would argue is the potential surveillance state they would create. So there are record keeping and reporting requirements that would be applied to convertible virtual currencies like Bitcoin that do not exist anywhere else in the financial system. And for transactions of certain amounts, they are requiring information about the sender and the recipient. So that's all counterparties of a transaction. So think about that. If you have an account at a crypto trading platform and you need to send some money to your friend who maybe you owe them money because they bought something and you got to pay them back. Well, this is very different than what a current transaction would look like. The exchange already knows who you are because you have to provide certain information about yourself before you set up an account, before you're allowed to use the platform. But if you're sending a transaction to somebody else, maybe they have an account at a separate platform. That person doesn't also have to submit all their financial and personal identifiable information to your exchange, the exchange you're using. So it would really make a huge fundamental change in the way some of these transactions would happen at the exchanges. So that in itself would be a huge cost to companies having to completely revamp their compliance programs. But the more frightening thing than just the cost is the hit this could have on innovation. It could make certain things completely impossible to do. We're very concerned about how this would impact things like smart contracts and the whole DeFi space, a space that's just emerging and is really just beginning to grow. And this could really squash the opportunity for those innovations to ever grow beyond where they are today. And then not to mention just the amount of surveillance this puts on legal actors. So there's lots of things that we have already expressed concern in. If you're interested in kind of following these issues in more detail, you can check out our blog. We actually just published another blog post last night to give everybody just kind of an update of the current state of play now that the comment periods have been extended. But there's lots of things that we're very concerned about, but we are very optimistic. So this has been pushed into the new Biden-Harris administration. It's now within their responsibility to take into implementation. And we feel like we're in a much better place than we were just a couple of weeks ago. And we have the opportunity to work with the policymakers to get this right. And I'm very optimistic we will end up in a much better place than where we potentially could have been at the end of last year if things had gone forward as they were originally intended to by the previous administration.
That's right. In fact, the new chairperson of the SEC, Gary Gensler, he's a blockchain scholar from MIT, and we've hung out so many times in the past, and inviting him to some of our Connection Science. He's of course part of the digital currency initiative there as well. So I think there is definitely a lot of optimism, perhaps something to do with his appointment to the SEC, but also I think, of course, Elon Musk has a full history of bumping up prices. Previously, he was being considered to be removed from Tesla, but of course that was not done because that was seen as a potential hindrance in the growth of the electronic vehicles industry. So I think it's kind of some gray area there for sure, right? Just yesterday I was reading this article that at least 20% of the price increase of Bitcoin is perhaps directly thanks to Elon Musk. But we have some interesting questions here, and kind of before I go into that, Perianne, what amazing story. I mean, you've just been a commander, leading the industry there. So, I'm just so fascinated with the kind of resolve and leadership that you're driving the industry and representing it in policy circles, but otherwise would have been a completely misunderstood and misinformed policy. And we've seen that over and over again, right? With the Facebook hearings, the kind of questions, and it's just like, wow, like you do not understand like the basic internet protocols. And I don't mean to be like poo-pooing policymakers here or anything. Most of us who, are from an economics background ultimately see policy as sort of the high, chamber where we need to affect change. Is the best way to create a positive impact and, help the society with its economic woes and in turn social woes as well. So I think, there's so much there, but we have a very interesting question here from David Goldsmith. I think we've touched upon that a little bit already, but I guess just to kind of go one layer deeper into this, about if we are sort of replicating the same sort of issues where there's a lot of chaos, there's a lot of noise, right? And the pace of technology is much faster than people can keep track of, but also at the same time, would we inherently recreate the same system that we ultimately started out fighting against, right? I'm saying we here because, I totally relate to that. That's very much my journey too. I was reading Michael Lewis's, I remember 2016 Flash Boys, all the front running in public markets, and how really regular mom and pop investors, David, to your question here, do not stand a chance. Now, of course, there is that is coming to an end because the story is out, the cat's out, so hedge funds are no longer making that sort of profit. But, that was personally for me an entry point into tech that inherently from an infrastructure perspective is decentralized, right? So if we can't change human behavior or incentives, let's try to change the technology infrastructure. So that was kind of, what inspired me in the space. And of course, we saw the whole ICO craze and now this DeFi. I've got questions on that as well. But what is your thought? And I think you do a lot of that, Perianne, kind of like I'm sort of semi-answering this because I feel like I know the chamber's evolution over the past years, but of course the education and the advocacy front. But what is your outlook sort of moving forward? There is a lot of noise and there is real risk of replicating the same structures that we're trying to fight against.
Maybe I'll just talk about some of our priorities at the Chamber today of the types of things that we're advocating for. The first is on clarifying the jurisdiction of digital tokens. This is an issue that many companies have been facing in the US specifically, of trying to understand which regulatory bucket they belong in. The US has a fragmented regulatory regime between the SEC and the CFTC and many others, and lots of and we don't have the guidance we need from the SEC today for companies to really be able to navigate that. So we have a significant amount of work underway to continue to advocate for regulatory clarity. And we're doing that within the agencies, within Congress, and unfortunately within the courts, because some of the regulatory clarity is happening through enforcement. So that's one. And if we can get that issue figured out, that would give many different projects the green light to be able to move forward in the US. The second is around tax and ensuring that we have clarity on tax reporting requirements. So that's another huge barrier to lots of companies that want to get involved with digital assets, is we don't have accounting standards for digital assets today. So that ends up being a big challenge for the accounting departments, especially of public companies. We are seeing that there are some early adopters that are able to figure that have been able to figure that out, but there's still a lot of work to do with the IRS there. And then the third is on the AML side. So we just talked about that with the battle we were up against with Treasury and FinCEN. But it is important that we have guardrails in place to protect the financial system. But again, we need to do that in a way that does not stifle the innovation. So before this Treasury rule, we were working on the travel rule, which is a global requirement for VAS, for virtual asset service providers. And now this new issue was thrown in at the last minute here. And then the fourth and final is on modernizing the payment system. So there's a lot of really interesting things happening today at central banks with central bank digital currencies, and then with stable coins. And that's another area where we spend quite a bit of time talking to our policymakers about how we modernize our payment system in a way that's going to ensure we can compete globally for many generations to come.
Right. So basically, I think what I'm hearing here is a lot of this has to come down to specific initiatives and industries and focus areas that you've identified within the space that will drive a lot of the innovation forward, rather than kind of, I guess, going in circles, whether this is right or wrong, but be like, well, we're doing this already here. So
very nuanced. Yeah. Blockchain public policy is incredibly nuanced. And that's one of the I think the challenges a lot of companies face is, you have tax issues, you have AML issues, you have issues from the securities laws. And then, if you don't fall in that bucket, then you're in CFTC's jurisdiction. And especially startups, which is a big part of our community, or young companies, they likely can't afford to have counsel in all of those specific areas of law. I don't even know if we have enough professionals out there with the expertise to be able to advise on all of these issues. And the same lawyer that's going to be advising on issues around securities issues is not going to be the same lawyer that can advise on AML or tax, at least not in most cases, unless you just happen to have an incredibly talented person on your team, which entirely possible, but those people are very, very few and far between. So one of the purposes of having a group like the Chamber of Digital Commerce is we can bring lots of companies together to pool resources. So everybody pays a little bit, everyone pays a membership to be a part of the organization. And then we use those resources to bring in those experts. And then we all share from the expertise that we've built at the Chamber. And then, we're working with each one of those regulatory bodies on the nuances of the laws and how they apply to our space. So it's very sophisticated work, and it's work that has taken us years and years and years to build up that level of expertise. And it's not easy. So there's not a kind of a one-size-fits-all approach to this, and it really depends on the area of policy or law that you're working in, and then taking that and going your own unique study of how that's going to apply to this new asset class. And in many cases, laws that were written decades ago are not going to fit very well for blockchain technology. So then we have to get creative of, well, do we have to come up with something new then? And that in itself is a significant exercise.
That is so true. And I think like past 200 years of the legal structure in the US, I mean, not just for innovation and not just for money and not just for financial technology, but like for everything, right? Like we had a bunch of conversations around immigration and that is very interesting too, on how that's so archaic and not working for the current globalized system, that globalized economy that we live in. We do have a couple of follow-up questions from Arvinder and Grace here, but I think we've talked about those a little bit, so that's okay. I'm actually just going to move forward and kind of ask Perianne about what is your outlook on where we're going to see the most growth in the space. So we are in the middle of a crypto bull run right now, and it's price driven, it's influencer driven, and perhaps also the change in the administration and friendliness towards crypto and digital assets there. You talked about a very important point on the lack of standards. So there are some bodies who are trying to like mobilize the industry to sort of come up with those standards. And the EU has done sort of similar stuff for AI, but kind of moving and looking into the blockchain space as well. But from the initiatives that you just discussed, where do you see a lot of the growth happening?
So if you look at the last bull run in 2017, a lot of the activity in the markets was by speculators and traders. So a lot of activity happening on exchange. If you look at the money that's coming into Bitcoin today, the activity of the investor and the profile of that investor looks very, very different than the profile in 2017. So the people who are coming into this space today, they are buying large amounts of Bitcoin and then they are removing it from exchanges and putting it into deep cold storage. That is the signal of a long-term holder and a long-term investor. We think that's very positive. I think that's very positive for you to show the maturation of what I just talked about in terms of Bitcoin as a use case being a store of value. And we're seeing that the users that we're studying in the markets today meet that. Today was a very interesting announcement from BNY Mellon, or actually it was yesterday. They announced that they are now going to custody Bitcoin. And I would bet that announcement for one of the largest custody providers in the world, if not the largest, was driven from corporate clients. So a lot of the demand coming in this space, I think, is coming from corporate clients who want to diversify their treasury reserves into something beyond cash. And Bitcoin is emerging as that diversification tool. And then I'll just highlight kind of one other example of why, I think that's where a lot of the demand is coming from. So NYDIG, who is really trying to position themselves as one of the key premier prime brokers for the space. They're the company that onboarded MassMutual onto Bitcoin. Just 2 weeks ago, their CEO, Ross Stevens, shared that they had somewhere between $25 and $35 billion in their order book today. So that's just one company who's serving some significant corporate clients. And the profile of the demand, the investment profile of the demand that's being driven today looks like it's those who are interested in using Bitcoin as a store of value. which is why, what I believe is what we're seeing in the marketplace today. And I think that's going to be a trend throughout 2021. And looking at something I'll be looking at is those quarterly SEC filings to see what other companies are going to follow and Square, MicroStrategies, and Tesla's footsteps of putting Bitcoin in their balance sheet.
So a lot of corporate interest and a lot of the bigger players sort of emerging in the fintech space who are providing that service. So I think, and Perianne, I know you mentioned that before as well, that now we're looking at institutional players who are kind of coming into the space, and it's no longer the crypto crazy boys and girls from 5-6 years ago, the nerds or the speculators, to now, okay, this technology is being taken seriously, and Bitcoin is in of itself, and of course with other cryptocurrencies, an asset class that institutional players need to take seriously as an investment vehicle. But I think, or I should say, investment through investment vehicles, which is kind of, I guess, topic for another session, because there is a lot there. Exchanges that, of course, are centralized, and then decentralized exchanges, and so on and so forth. And we can go a lot deeper in there, but I would totally encourage everyone to check out. I just posted the link to the Digital Chamber's website, just if you scroll in the chat function, but also the Digital Economist paper series, which of course we leverage blockchain technology and sort of the risks we are looking at from asset classes to where growth is happening, so on and so forth, and check those out, and sort of the complex world we live in, where is the truth in it all, and so we're quite bullish on that, and you'll see that in a lot of our conclusion of our position papers, but also policy advocating for inclusion. And I know, Perianne, I remember 3-4 years ago when we were sitting down, we were chatting about how we are feminists. So tell us a little bit about, just as a parting 2 minutes, what is your one key message that you want to leave the audience with today?
Well, yeah, I think I already said it. So I think one of the most important questions you can ask yourself, just as an individual person living in today's world, is what is money? And I really encourage everyone to go on your own personal journey to really understand those dollars that you have in your leather wallet, or those dollars that you have in your bank account. Where did they come from? Where does its value come from? How are they made? How are they issued? How are they regulated? What do they represent? And once you can answer those questions, you'll be able to understand why I'm so passionate about something like Bitcoin, because it is very much an alternative to the current system that we're living in. And I don't think there's anything more powerful that we could be spending our time contributing to than addressing the macroeconomic issues of today. They are vast. There's lots of people and economies that face significant challenges, but you do have the opportunity to take control of your financial status. And I do think blockchain technology is a tool that everybody can leverage to do that.
Thank you. So go do your economics 101 one more time, and then come back to blockchain 101. Thanks all for joining, and please join us next week as well. I've just posted the link to our speaker series. My name is Navroop Sahdev, and I was joined by Perianne Boring from the Chamber of Digital Commerce, and we will see you next week. Thank you all.